Congratulations on the big quarter. Let's talk about challenges on the inflation front that you, your peers, companies across the board are dealing with. Higher labor costs, higher freight costs. How are you finding yourselves able to navigate that? And what's your view as we move forward through 2022?
So, Alex, it's all part of business, managing costs. We've got a big margin. I think the challenge is to keep a focus on that margin. The way we do that is allocate capital at a longer-term $1,200 gold price. And then, it's all about management. And as you know, we set out to build a different-looking company in the new Barrick with a very big focus on best assets and best people. And I think the best people part is critical. Our mining industry needs to get on the front foot, build something that's more acceptable for future generations, and take a different position when it comes to how we manage our business.
Given that, Mark, and I've known you for a long time, and you're a pretty convincing guy, why is the market treating you in the way that it is right now? What have you got to do to convince the market that this is a higher value business? What am I missing here?
So I think, Alex, as you know, I mean, you and I have known each other for a while. I manage on very clear milestones. I think we set out to do three big things in the combination, both the Barrick-Randgold merger and also the JV in Nevada and taking Acacia private. And we started out with a $4 billion debt. We said we want to fix the balance sheet. Today we've got no debt. We want to build a business that pays real returns based on the strength of the P&L. So fix the business next, which I believe we have in this 2021. Despite the challenges of last year, show what high quality assets can do, and then return to shareholders. And we started out $4 billion of debt, net debt. We've got net cash now. We've paid out $2.5 billion of cash to our shareholders. We've got a strong platform of top quality assets, best in the industry, and now we deliver. And this is a long game. And as you know, gold prices go up and down, costs go up and down.
Right.
And it's a long haul. And I think we're really at that point now to stand up and say we deserve a better rating in the market. We support that rating with a high quality business.
All right, Mark, well, stock prices go up and down just as you say, gold prices go up and down. So let's talk about the gold price. What is your outlook in an environment where central banks are moving towards tighter policy?
Yeah, Alex, look, if they carry on at this snail's pace, we're going to have a major problem because we don't get anywhere near dealing with this negative interest rate. That's good for gold. I think added to that is all this free money, this massive quantitative easing, the huge governmental debt in the developed world are all worrying factors. And I've just heard the previous speaker, this concept that it's all going to be different. We've been there before. Guy, you know this. This world is in a very precarious place, both economically and politically. Geopolitically, we've never seen so much conflict for 2 decades now. And gold always works well in those times. And of course, Barrick also has copper, and copper is a new modern metal, more strategic than most, I believe. And so I think Barrick is really well positioned to be able to build a proper business, and not only just relying on the sort of sentiment side of things, but a high quality, big margin business because we have world-class assets.
Mark, you are no stranger to large-scale consolidation. Other mining execs are sounding very cautious at the moment. What is your attitude? Do you think we're still in a world where large-scale consolidation is possible, that investors will be backing that? Do you see any opportunities that could push you in that direction?
So, there was a unique moment where investors and the companies like Barrick and Randgold and even the Acacia deal and the joint venture deal between Barrick and Newmont really delivered values because we all work together. And consolidation needs that. It needs shareholder support, and it needs shareholders to think longer term. I've said this for a while. And right now what we've seen is another round of smaller consolidation at the top of the market. The margins that have been paid are very similar to those that hurt the industry in the last cycle. And so, I do believe that the industry does need consolidation. It needs careful rearrangement of the assets in appropriate baskets.
Well, what does that mean for Barrick, Mark? Are you looking at any assets in particular that you would be interested in potential making some potential acquisitions?
Alex, I've always looked at opportunities and done very few. And what's driven, I think, the success of my career and the companies that I've been involved in is the things we didn't do. And so, it's easy to do deals at these sort of prices because high gold prices and commodity prices floats all the boats, and you can't see the potential risks. And we're very careful about sticking to our investment criteria. Of course, we're not shy of doing big deals, as we've proven in the past. But right now, Barrick's got some very solid organic opportunities to continue to grow on in the base that we've built. And they've focused on value, and we've got a very strong balance sheet, strongest in the industry. And we've got a policy of making sure that we reward our shareholders as owners rather than just investors. And so I think, we will look at opportunities when and if they arrive.